Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 30th of April. All right, now as we come out to close out the month, now some good US numbers have really got the market in balance, I should say. I was going to say between a rock and a hard place, but it's sort of really in balance. What we're seeing is the treasuries, okay, the Fed have come and gone. They said they're not going to do anything for ages. Yields sort of dropped, and now they're coming back, right? So this is, we've got weakness following the Fed meeting. Now that's been diffused somewhat by this move in the treasuries. If I just get that up, you'll see just on the yield curve there, they are bouncing quite aggressively. So this is where it's going to get interesting. So just having a look technically on the charts, you see these, we've got some nice sort of downtrends here in the dollar. Obviously dollar yen, the odd one out. Dollar CAD still cruising to the downside, dollar index, dollar Swiss. But what we're seeing is, look at the price action here of euro. It's really stalled with that sort of bounce back in the treasuries. And funnily enough, this is, well, where it's stalling is right on resistance for sterling and right on that sort of barroom brawl area there for euro. And Aussie and Kiwi are just pretty much following suit with what's going on in Euroland, right? So, and with that, you can be pretty confident when the situation gets like this, and what I'm talking about where Aussie and Kiwi are just sort of mimicking euro without too much local data impacting those pairs. Whatever happens to euro, you can be pretty confident it's going to happen to Aussie and Kiwi as well. Sterling, you know what? If anything, it looks like it's rolling off the power that the euphoria around the vaccine has been having. So just it could be starting to come back into play a bit more with the the traditional correlations with euro. I mean, these four bottom pairs, 99% or 95% of the time sort of correlate. So anyway, it's going to be interesting to see what happens. We've got some trend lines to work with. If anything, you're just tuning up the resistance line here on sterling, a little pop above. You can see now the Aussie's got like this triple top as well after hitting there again yesterday and stalling. So that's 78.15 is going to be a bit of a level, and we've got levels on the downside. So we've got technical levels. We've lost the momentum, okay, somewhat, but we still do have downtrends here, short-term downtrends on the dollar. Now, as we come in, like the data, right, is starting to play a bit of a part. So as you come back down, looking through the things that are coming out today, the PPI in Australia is not a real big thing. So I'm not sort of too interested in that. The housing credit might be a bit of interest. The housing market is an issue down here. Nationwide house prices in the UK, GDP numbers out of the Eurozone, and more personal consumption numbers, personal income, PCE price index. Some sort of decent numbers here, right? These numbers here, don't brush them aside. They are sort of quite important. So if we do get strength in these numbers, well, you know what? I think we might see the Treasury still bounce, and that should, or the price, this is the price going down, so the yield's bouncing. If the yield bounces, well, the dollar should go up. Right, so don't get sort of caught into a risk on, risk off profile. I think the treasuries is still the key, and the data connecting. Market's really diffused. It could go either way. Keep an eye on the data. That's my tip. All right, guys, have a good one. Cheerio.